Good evening again. I hope you're doing great. I'm here with you for the daily analysis of the EUR-USD currency pair on March 6th. We're currently reviewing the weekly time frame. As you can see, in the long term, this currency pair is in an uptrend.
7 powerful volume trading indicators: footprint, volume profile, and fastest gap. Level up your trading.
Recently, over the past few weeks, the price was reacting to the support level of 1.1769 and had managed to stay above this support level. However, with the onset of tensions between Iran and the United States, we saw a sudden strengthening of the dollar and witnessed a drop in this currency pair. In this move, we saw a price drop of more than 2%, and the price even fell below its previous low. By examining the daily time frame, we can see that in the past week, with the rise in oil prices, the dollar gained significant strength. On the other hand, with the increase in energy prices, the euro weakens, and as a result, this strong decline occurs. After the sharp price reaction to the news of the war breaking out, we saw that ultimately the price was able to stabilize above its previous low, and the long candlesticks of recent candles indicate the high volatility of this currency pair following the released news. If this support is lost, we can expect a sharper decline and a move toward the daily order block area around the price level of 1.1493. We are currently reviewing the economic calendar. We know that in such wartime conditions, the most important driver of financial markets is news related to the war. Nevertheless, we will review the news related to this currency pair. This week, we had news regarding the US dollar, the ISM Manufacturing PMI, and the ISM Services PMI, both of which were released better than the forecasted figures. Also, on Wednesday, the ADP non-farm employment report was released with a figure much better than the forecasted number. Today as well, we will have important news for the US dollar. But regardless of how these news results are released, as we mentioned, the main driver of the market will still be the ongoing military tensions. As a result of these tensions, we have seen that during this trading week, the US dollar has been the strongest currency in the market, while the euro has been the weakest. Also, on a daily basis, we can observe that the US dollar is among the top 3 currencies in the market, and the euro is being traded as one of the weakest. So under these circumstances, our outlook for EURUSD remains bearish. Now, we are analyzing the 4-hour time frame. We can see that during the sharp drop that occurred on Tuesday, the price reached the 4-hour unicorn zone and rebounded upwards from this area. In the past week, the 4-hour order block has formed a strong support zone for the price, and none of the recent candles have been able to close below this area. By analyzing the 1-hour time frame, we can see that after the news of the outbreak of war, the price opened the new trading week with a gap at the start of the week. Afterwards, the price managed to rise and reach the previous low, and then, with the strengthening of the US dollar and the weakening of the euro, we witnessed this deep decline. Now, over the past 2 days, we have seen price fluctuations, and the 1-hour FVG that you see in the 1.1654 area has acted as the most important supply zone. Each time the price has reached this area, it has encountered a reaction and moved back down. Given the ongoing war conditions, we still expect the downward movement of this currency pair to continue, and due to the fluctuations we've seen in recent days and the sensitivity of financial markets to published news, we do not recommend entering any specific trades at this time. Wishing you success and profitable trades.